Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. One of the biggest takeaways from U.S. President Donald Trump's State of the Union address is his message on a strong economy. The U.S. midterm elections in November, Trump addressed affordability concerns with statistics and self-congratulations. Now, Trump largely focused on domestic issues. His nearly 2-hour speech, which was a record, mentioned his signature tax legislation and trade policies as well.
I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. Moving forward, factories, jobs, investment, and trillions of dollars will continue pouring into the United States of America because we finally have a president who puts America first.
Shares of Loblaw are falling sharply today. The grocer saw its largest intraday drop since December 2023 after fourth quarter revenue missed estimates and profit came in slightly above expectations. Food, retail, and pharmacy same-store sales were up. However, December sales saw a brief bump due to the holiday season. The results come as high inflation and rising cost of living concerns have led consumers to tighten budgets and save money. Reuters is reporting OPEC Plus will likely consider raising its oil output for April. This will mark the end of a 3-month pause in production increases. According to the report, the consideration might come as the group prepares for peak summer demand and tensions between the U.S. and OPEC member Iran boost prices. 8 OPEC Plus producers are scheduled to meet on March 1st. All right, quick peek at the markets, and you can see the TSX continues that rally. It is up well over 34,000. First time, looks like it will close above 34,000. It's up 0.82%. South of the border, another good day down there as well. You can see the S&P 500 up by 0.75 of a point, the Dow by 0.6, and the NASDAQ up nearly 1.2. Well, investors are poring over more Canadian bank earnings. Both BMO and National Bank are trending higher after reporting first quarter beats. You can see BMO's up 4.4%, almost 4.5%, and National up by nearly 7% right now. Let's get some perspective on this from John Zechner, chair and founder of J. Zechner Associates. John, thanks as always for joining us.
Hey, Roger.
Any real surprises with BMO and National?
Well, they beat as expected, and we sort of thought, I mean, there's pretty good tailwinds. The economy was stronger than expected in the back half of last year. The rate structure is positive for banks. Capital markets were strong, as you mentioned. TSX had a record, and a lot of that has been in the mining sector and others where there's corporate finance. Their own trading was strong, so that was all good. And so we really expected they'd be ahead of expectations. But I think what both National and BMO did was even a little bit better than that. Their ROE targets went a little bit higher in the process, and the loan loss provisions dropped. I mean, you're down to 30 basis points on National, about 40 basis points on Bank of Montreal. And what you saw yesterday, Scotia, even though they beat, their provision for credit losses, the PCLs, went up to about 61 basis points. So they went in the other direction, which is probably one of the reasons why the stock traded down at the end of the day. So, they've got some pretty good tailwinds here, Roger. The issue going forward is where is the growth going to come from? Because clearly you haven't got much revenue growth, not much top line growth. So it's the guys who can best cut cost, increase the ROE, do share buybacks, and probably the banks that have the most upside are the ones that can still consolidate their recent acquisitions. You saw that, for a couple of years with Royal Bank when they brought in HSBC. Now you've got National bringing in the Bank of the West, the Canada Western Bank, and then BMO are getting a turnaround finally because they had a miserable couple of years when they brought in Bank of the West initially from the U.S. That was a massive acquisition. and it took them a while to turn that one around, and they're starting to see the benefits of that now. So that's where you get the growth from. But Roger, I mean, you look at the valuations, what 14 times forward PE basis, for the banks up to the high end, north of 2 times book value, 3.6% dividend yields. These are right at the top end. So what drives the ship higher from here? That's a harder call.
Are we approaching as good as it gets then? I mean, are we kind of getting into Mag 7 territory where no matter what they do, it's not good enough now?
Well, that's probably very close to, because there's certainly no room for disappointment. And like I say, with the Scotia numbers, and they were very good across the board. And yet, one little tick, the loan loss provision is going a bit higher, shows less profitability and maybe more risk in the loan book. Either that, or they're being more conservative than the rest, and the stock went down. So yeah, you really got to generate some excessively positive results in order to drive the stocks higher.
And what can we expect before we jump onto some other stocks? What are we expecting with TD and Royal Bank? Pretty much the same?
I would think the same. Like I say, Royal has this nice tailwind still with bringing in the HSBC acquisition. Nothing could go right for TD until about a year ago, and now they're starting to, they got the excess capital, so that looks pretty good. Commerce has done well the last couple of quarters, so actually a couple of years, and they've gotten rid of that discount multiple. So it's really this. I'd be very surprised if they didn't, meet and beat, but it'll be driven by capital markets, trading, and all these activities that are somewhat cyclical in nature, and there is not much top line growth, and that's probably the worry down the road, is because they're going to get an incursion from electronic banking and other things down the road. There's competition coming to some degree, and there's growth is harder to come by. So yeah, how much are you willing to pay for that?
All right, let's jump to a couple others. Cargo jet net earnings drop year over year. Tariffs having an impact there.
Yeah, I was surprised the stock was down, though, because it was a beat well ahead of expectations. The EBITDA was around 95 million. I think the expectation was around 75 million. They're doing about a 30%, annualized revenue growth over the last quarter. And, they obviously, you're still getting a lot of air freight transport, and that's a great growth area. They got the DHL contracts, a lot to China. And the stock got hit last year on worries that the tariffs, another thing, were going to, mitigate and then slow down the trade pretty dramatically. But they've gone through that, and they was worried they had added capacity at the wrong time, but their margins improved. So it's a pretty good story at a decent valuation. So we like it. It's bounced well off the lows you saw last year, but like I say, I'm a little surprised on a good number that the knee-jerk reaction was to sell it.
All right, and south of the border, Lowe's like Home Depot, good numbers, but it's looking ahead that has people concerned.
Yeah, it's the big driver for both of those is the housing market. The do-it-yourself market, the renovations, and housing has been slower in the U.S. You don't have a lot of new builds, you don't have new housing starts. So, the DIY, the do-it-yourself guys are, they're still in there spending, but not at a great rate. So they beat, but the expectations for the coming year for Lowe's are, sort of at the lower end of what the analysts were looking for. The range is certainly encompasses the lower band. And Home Depot was, similarly sort of a little despondent or, dour about the outlook for the next year. It's just that housing market is soft. And unless you see more significant rate cuts in the U.S., the mortgages are rolling over at higher rates still. And, that's slowing the housing build. And you've seen that in the home builder. So that is that's a big driver for both of those names, which is why, certainly why Lowe's is down today.
All right. NVIDIA coming out with their earnings after the bell. Is the market reacting already? Is that why we're seeing the jump today?
Well, yeah, I think there's no way in the world they're not going to beat and raise. I mean, the annualized spending on AI infrastructure has gone up dramatically since they last reported. And you saw it when, with Amazon spending $200 billion, Alphabet at 175 billion. They've all increased it. I think the total now is for 650 billion in expenditures, over this year, and that's against 400 billion last year, which was already a massive number. So, and most of that goes to NVIDIA. So they will beat and they will raise. And this stock has had just a phenomenal rise and phenomenal results for a number of years now. I guess why the stock has sort of stalled a little bit, in the past 6 months or so is the investors saying sort of what's next. This can't continue necessarily at this rate. And that's why the multiple in the stock has come down. And they're getting a little bit more competition. Obviously, AMD sort of breaking new ground in there with Meta yesterday, and Broadcom is sort of gaining ground. And then you even some of the hyperscalers like Alphabet is talking about their own GPU chip architecture structures, so they don't have to go completely to NVIDIA. Problem, Roger, is when you've got a 90% market share and 75% plus gross margins in semiconductors, there's only one way to go, and that's down, and that's a little bit reflective. So I don't, we can't continue spending at this rate on CapEx. But to the degree you can, maybe the beneficiaries will be others. Like hyperscalers will only spend at this continuing rate if they're getting a huge ROE, a hard productivity improvement or results revenue from this. And if they're getting that, quite honestly, I'd rather play, Meta, Alphabet, and all those names directly. So I think that's, that's where, what's unfolding in the stock. I think the bigger one tonight, Roger, is Salesforce, because software has been decimated over the past 6 months, and everybody thinks it's sort of the end of application software. And I think, Salesforce is going to be a good indication, a good litmus test for whether they can, have been able to amalgamate Agentforce into their offerings and get some growth there. And that'll be a big tell.
John, we got to wrap it up. We're running out of time. Always appreciate it. Thank you as always for joining us. Cheers, John. Okay, John Zechner, chair and founder of J. Zechner Associates. Coming up, some companies are seeking refunds after the Supreme Court struck down U.S. President Donald Trump's tariffs. We'll look at the case right after the break. Well, major U.S. companies like Costco, FedEx, and Revlon have filed a lawsuit against the U.S. government, seeking full refunds for tariffs. Now that the U.S. Supreme Court has made its decision, we are discussing the legal parameters of the case with Lawrence Herman, former Canadian diplomat and international trade lawyer at Herman and Associates. Lawrence, thanks very much for joining us.
My pleasure.
So the tariffs briefly ended. Now they're in a different form. Where does this leave all the tariffs that were collected up until the Supreme Court ruled?
Well, that's a good question. The tariffs have been collected illegally. The Supreme Court said that those EPA tariffs, if I could call them that, were contrary to law. So there's a refund that is owed to the companies that have paid those tariffs. But getting that refund is complex and time-consuming because you have to go through a particular process, a complicated process. The companies that want to get the refunds have to be very precise in terms of how they identify the amount paid and on what products they were paid. It is a mess. And frankly, it's going to take a lot of time and a lot of litigation going through the courts before this is resolved. A lot of the U.S. trade lawyers that I deal with say it's going to take a long time before those companies that have paid these tariffs are fully refunded. So what we've got, if I could speak generally, is not just chaos internationally with the striking down of the tariffs by the U.S. Supreme Court, but internally, domestically in the United States, it is very complex, very unstable, very uncertain. It's chaotic, and it's going to take a lot of time, a lot of effort, and a lot of money for companies to get those refunds. It's not just a matter of filing an application and saying, hey, pay me the money back. It's much more complex and technically detailed. So that's where we are.
What is involved in it? I mean, is Trump going to appeal this, or are they going to appeal that, or is it just they're going to challenge every step of the way?
No, the government, the U.S. executive, has said they will not contest refunds. The question is whether all of the complications and technical requirements for getting those refunds have been followed. I mean, the monies were collected by the Customs and Border Protection, And some of those monies were held pending a certain time period, allowing parties to file complaints or requests for adjustments. But where those funds have actually been, as they call it, liquidated, you have to go through a much more complicated process. And it's not just the customs people, Customs and Border Protection, that collects the money where companies have to go. In some cases, and this is started by many of the larger companies, you go to the courts, the Court of International Trade. And so there's, in a way, a parallel process, seeking refunds through Customs and Border Protection, but where the money has already been liquidated, as they call it, or collected and finalized, you have to go to the Court of International Trade. So it's a complicated process. When lawyers get involved, there's always a lot of money that it costs for parties, and that's going to continue. I think some of my colleagues in the United States say it could take years before all the refunds are obtained by companies. Now, so that's what's happening internally. As I said, it's also caused huge amounts of problems internationally for all of those U.S. trading partners that have concluded deals with the United States on the basis of some kind of tariff solution. Now the tariffs have been declared illegal.
Now, I imagine a lot of the large companies have probably kept track of all this, and for them, it's worth it. Do we know a percentage of this money went to, say, small companies with minor amounts, and they made us look and go, we're not even going to try and get the money. We're not even going to try this? Well,
I don't know what the breakdown is. The larger companies, of course, you mentioned in your introduction, I think a number of these companies, they have the resources that they can withstand all of the costs and underwrite all the costs, et cetera. The smaller importers who pay the duties may not have those resources, but I don't think many of them are just going to shrug their shoulders and say, oh, well, let it go. I think they're going to want to get their money back. It's going to cost them some legal fees. It's going to take a lot of time, but that's the result of the illegal use by Mr. Trump of his assumed authority under the International Economic Emergency Powers Act.
Now, going forward with Section 122, can there be any court challenges to that, or is this one looked at as being done legally?
Well, that's a very good question. There are many who say that the Section 122 tariffs, which are to deal with immediate balance of payments problems, can be litigated, and so there's uncertainty that those new tariffs will withstand court challenge. So even Section 122 is going to be under assault, and who knows where that is going to lead us. The point is that while Mr. Trump has said he's a tariff man and he loves tariffs, and tariffs are the basis of his trade policy, the right of the executive to apply those tariffs almost on a whim in an undisciplined manner is questionable. Okay. So we could see challenges. In fact, there are going to be challenges under the new Section 122 tariffs. All so right. We're facing uncertainty in a major way, and nothing is clear as a result of Mr. Trump's tariff wars.
Okay, so the lawyers are going to be busy. You'll be busy. Lawrence, thank you very much for joining us. We'll let you get back to work.
My pleasure.
Lawrence Herman is a former Canadian diplomat and international trade lawyer at Herman and Associates. Coming up, time for Hot Picks. We're zeroing in on 3 global stocks after this. Well, time for Hot Picks. We focus on 3 global stocks with Fabian Renauer, portfolio manager at Canoe Financial. And we kick things off with his thoughts on Public Policy Holding Company as his top pick.
That's a holding company that owns several leading lobbying firms and corporate communications companies. They're primarily focused on the U.S., as you mentioned. The way to think about them is they're essentially a consultant that helps their clients navigate the political landscape. And so politics is an area of major risk and opportunity for companies. So if you think of businesses like Google or Cigna or Meta, they want to go with a well-established provider that is reputable, has been around for a long time, and that's essentially PPHC. They serve about half of the Fortune 100, about a quarter of the Fortune 500, so really as good of a client base as you could ask for. And what we like about the business is that it's an industry that will never go out of fashion. I mean, it's been around for a very long time. It will always be around. PPHC are building a winning team. The industry is still very fragmented, so there's a lot of room for them to continue to grow.
And
political uncertainty actually benefits them, which is also very nice in today's environment. We have a lot more uncertainty politically than we would probably like. And the attractive part is that the company trades at a very attractive valuation for such a high-quality consultant, about a 7 to 8% free cash flow yield. The reason for that is just it's a small business, it's undiscovered. They only recently dual list under the NASDAQ. That's the opportunity. But we think it's just going to be a matter of time until more investors take note of the success that PPHC is having.
Right, and so they just went public, not a huge deal. They raised only about $50 million US.
Yeah, so they were public in the UK since 2021 on the UK small cap exchange, which was really not ideal. I mean, you know, they're a US company in a very American industry, so it was very, very undercovered in the UK. And they finally got enough scale that they could do a list in the US on the NASDAQ. And so really, we think that's going to elevate the profile of the company. And the share price has just not kept up with the success that they've been having. They've grown leaps and bounds, and it's a great business.
Equifax, the big global credit bureau, and also important, I think, for new employers that they're trying to verify the history of applicants.
Yeah, correct. So they're one of 3 global credit bureaus. The way to think about a credit bureau is if you or me apply for a mortgage or a credit card or an auto loan, the lender has to get the data somewhere to verify our income. And so essentially, they go to the credit bureaus and they get a credit report, and that's what they use for underwriting. And as you mentioned, they also have an income and employment verification business. It's called the Work Number. And so if a underwriter or a government agency wants to verify a consumer's current employment status, they just ping the Equifax database. And so what Equifax's businesses share in common is that they are powered by proprietary data, right? So on the credit bureau side, there's only 3 players, Equifax, Experian, and TransUnion. They're the only ones that have that data at scale. On the verification side, it's actually even more concentrated. So even Experian and TransUnion have a very, very hard time getting that data. They're trying, but Equifax is by and far the number 1. Not quite a monopoly, but also not a million miles away from it. And so what we like about that business is the verification business has a very long runway to grow. A lot of verification today is still done manually, just by using the phone and calling up the previous employer or the current employer. Pinging the Equifax database is so much more efficient. The return on investment is very logical. And on the credit bureau side, they have a very big mortgage business. And so as you might imagine, the recent rise in U.S. Mortgage rates has really, really hurt that business. So they're vastly under-earning today. It might take some time, but when the day comes that U.S. mortgage rates do come back down, there is a lot of revenue that will flow back into that business that you're really not paying for today at a close to 5% free cash flow yield.
The final idea, Deutsche Börse. Now, they're a stock market, a stock exchange company, and there have been fears that AI will hollow out some of the lucrative data businesses of that industry.
Yeah, so what's interesting there is, as you mentioned, they're a leading exchange group in Europe. They're actually less a stock exchange than a derivatives exchange and clearinghouse and settlement venue. So a lot of really, really critical market infrastructure that usually concentrates around a single market leader. So in this industry, there are natural network effects. Regulators also don't really like new entrants because this market infrastructure is so critical, right? And so if you want to trade in European interest rate futures, for example, there are really just 2 providers that you can use, for example, Deutsche Börse and Intercontinental Exchange. So incredible market position, and the data you mentioned is proprietary data that comes out of their exchanges. So there is nobody else that can sell that data other than them. So if you're a company that collects historical data that's publicly available, yes, there is more AI risk, but that's not what Deutsche Börse does. They just resell their data, which is a byproduct of their exchange business. And so why we like that business is, number 1, the assets are incredibly durable. They're so difficult to displace. And they have a number of secular growth drivers on top of that. So, for example, one of their businesses is the European Energy Exchange Group, which benefits from Europe's shift towards renewable energy. It requires a lot more hedging because you essentially have a more volatile energy price environment. And the energy exchange also benefits from derivatives being increasingly cleared and traded over exchanges rather than over the counter, which is what regulators are actively encouraging to mitigate risk in the market. The second part of the business that is really attractive is that they are in this enviable position of benefiting from a rise of debt outstanding in Europe. So the more debt companies and governments in Europe have, the more revenue Deutsche Börse makes because they monetize that whole stack. So that debt just goes one way, which is upwards. They have a number of other growth drivers as well, but really to summarize it, it's incredible assets that can't be replicated, good long-term growth, and it trades at about a 6% free cash flow yield just because there's a lot of uncertainty today, as you mentioned. People think about this as just a data business, for example, and that's just the wrong way to characterize it.
That's Fabian Renauer, portfolio manager at Canoe Financial. Coming up, Thomson Reuters saw its biggest intraday gain since October 2008. That was yesterday. We'll talk to Steve Hasker, CEO of Thomson Reuters, on what's moving its stock. That's after the break. According to new analysis from Canada's housing agency, housing affordability challenges have eased in recent years but still remain at historic highs. The Housing Affordability Composite Index shows how affordability issues have spread beyond Toronto and Vancouver to other major cities like Ottawa, Montreal, and Halifax. The agency also says renters have experienced more stable conditions over the last 2 years. U.S. Trade Representative Jameson Greer says Canadian and U.S. trade officials spoke today and will continue in-person talks in the next couple of weeks. Greer said Canada has a few ideas which the U.S. is open to while it focuses on domestic manufacturing. Greer was asked when he expects to reach a deal with Canada, which he said, "We'll see," adding his team is focused on the CUSMA review later this year. Shares of National Bank are climbing today, up almost 6.5% right now. The lender beat profit estimates in the first quarter with strong results across the board. The bank's personal and commercial banking income grew by almost 50% from the year earlier, with its recent acquisition of Canadian Western Bank contributing double-digit gains. The Montreal-based company also plans to return more capital to shareholders by repurchasing more shares than before. And looking at the markets, the TSX softened a little bit from earlier today, but still up above 34,000, record intraday. And if it holds on, record close. That was set, of course, on Monday. It's up 0.72% right now. South of the border, similar story. Up nicely everywhere you look. The S&P 500 up by 0.73, the Dow by 0.59, 0.6 roughly, and the NASDAQ by more than 1.1. Thomson Reuters is announcing it has reached 1 million professional users on CoCounsel, its legal and business AI platform, and revealed a new collaboration integrating Anthropic's Claude model. For more on this, we were joined earlier by Steve Hasker, President and CEO of Thomson Reuters.
What we've done is we've created an AI platform for fiduciary professionals. So, as you said, lawyers, tax and accounting professionals, auditors. Essentially, we developed it a couple of years ago, and we've developed it in such a way that it is model agnostic. So, in other words, we can take the very best enterprise focused foundation model and swap that in. Now, at the moment, in our view, based on our testing, that's Anthropic's Claude suite of models. We have, though, developed our own model called Thomson, which is starting to outperform many of the models specifically for legal. Mm-hmm. And so it wasn't developed with Anthropic or Claude, but certainly we think their enterprise models are the best at the moment, but we've created some flexibility as we go forward.
I asked that because, of course, the investors were alarmed to hear about Anthropic developing plugins for Claude that could work specifically with lawyers. You have said that where the AI is the biggest change for the legal profession, really since in the modern era. Tell us why. How will it be so important?
Yeah, I mean, the legal profession sort of in its current form, I think, is probably to 350 years old.
Okay.
It was sort of started in the tea houses in the city of London all those centuries ago, and it sort of fundamentally hasn't changed all that much. Certainly, word processing technology and e-discovery and other things have made some differences, but in our view, this will enable lawyers to be this being AI, will enable lawyers to be very, very significantly more productive. And I think what investors missed with the sort of Anthropic announcements and some of the moves of the foundation models is at Thomson Reuters, we serve fiduciary professionals. And I think we have to distinguish, and investors, I don't think have done this yet, between sort of knowledge workers, so that's general office workers at one level, professionals, so whether that's salespeople, communications, marketing, architects, whatever it might be, from fiduciaries. Fiduciaries being lawyers, tax, accounting, audit and the like have to be right. I mean, the consequences of being wrong are very, very severe for fiduciaries. And what we do is we combine a model like Claude with, I think most importantly, our content. And we've got centuries of curated, highly specialized, very accurate content with deep domain experts, thousands of them who train our agents. And what it does is it produces results that are fiduciary grade versus results that may be 95% right, which is not acceptable to these fiduciary professionals.
Yeah, I mean, that's the big thing, isn't it? It's got to be right. Although your stock is down by half in the past year. And the market, that's a lot of bright people have been selling the stock. Are they completely wrong?
I think they are. I mean, I think they've missed this point about the quality and the importance of content and expertise to train these agents in this environment. We think we're the only player who can do that effectively and meet or exceed the needs of these fiduciaries. And so we think the investors have missed it, certainly over the last 6 or 7 months, and particularly over the last few weeks.
I have to ask you, and I don't think I'm going to get an answer. The Thomson family of Canada hold a big stake in Thomson Reuters. They have lost tens of billions on paper here. Have you talked to any members of the family?
Yeah, we're in close contact with the family. I mean, bear in mind, in the prior 6 years, the stock rose from $65 up over 200. So net, it's been a positive trajectory over time, and we have every intention of arresting the recent decline and getting back to those levels, and that's what we're laser focused on doing.
You've been on something of a PR campaign this week, or at least you're out there telling the street and the media, hey, we're fighting back here, and this threat is exaggerated, in your view.
It certainly is, and while we don't like to see this sort of pressure on the stock price, the business continues to perform, and as a team, we are laser focused on getting back to where we think we need to be and deserve to be.
You have this hoard of legal data, and as you say, it goes back centuries. You ingest tens of millions of legal documents every year. So is that proprietary, or can other people get at it?
No, it's proprietary. I mean, essentially what we do is we take many, many different sources, including court records and all of the sort of case law in jurisdictions across the world. We ingest that, but most importantly, our attorney editors, and we have 2,700 of them on staff, spend all day, every day interpreting those findings, dissenting opinions, figuring out which cases are relevant precedent, which aren't. And then in addition to that, we have many hundreds of practical law editors who are creating the best version of a particular draft, the best clause, the most specific IP for legal practice areas. So sort of that which is publicly available is a starting point, and it's an important starting point, but it really is the value add that our talented staff members add. That's what makes the difference, and that's what delivers the accuracy and the depth of expertise.
You do have competition coming at you, though. LexisNexis, your arch rival, teamed up with a legal startup called Harvey. I know you've said there are frothy valuations in these AI spaces, but you do have competition sniffing around.
Well, we've always had, I think we've always had, formidable competitors that we respect, and we've been able to invest appropriately and outrun them. And so we're not arrogant about it. This is a moment of disruption, but we're certainly confident in our starting point and the plans we have going forward.
What do you think broadly, will society be able to get away with fewer lawyers in the future?
Well, the first thing I think is that this sort of tech disruption will be no different than prior, whether that was the sort of steam engine, the combustion engine, factory automation, the internet, cloud, mobile, social. All of these things have created a spike in standards of living, improvements in standard of living, and a spike in legal activity and demand for high-end legal services. So I think the sort of broader addressable market for law firms, for general counsel's offices, goes up, not down. I think the question, which is as yet unanswered, is how much of that demand will be met by the technology, and we're the largest provider of that technology in the world today, and how much will be met with trained lawyers. And I don't think anyone knows that yet. It's too early to tell.
Andrew was speaking with Steve Hasker, CEO and president of Thomson Reuters. Coming up, parents are worried about kids' interaction with phones and what they can access. One Canadian company is doing something about it. I'll tell you what after the break. It is a conversation most parents probably have. When is the right time for kids to get a cell phone? One Canadian company is answering that question with its own phones designed to grow with your kid. It's called Pinwheel. Here to discuss what the phone does and how it helps children navigate responsible phone use is Dane Whitbeck, CEO and founder of Pinwheel. Dane, thanks very much for joining us.
Absolutely.
When you say a phone, is it actually a phone or is it an operating system that you would install on another phone?
Yeah, so we do sell the phone itself with the software already installed on it. And there's a good reason for that. We don't really make that hardware. It comes from great providers like Samsung or Motorola. But we do sell the phone with the software installed so that the parents, customers, do not have to install and configure, and they don't end up with loopholes, right? So we make sure that we've tested all of the software on this particular hardware to cut down on loopholes. So that's the reason we sell the hardware and the software together.
Now, can people bring in their own phone to use, or do you prefer that they go through you?
They actually cannot bring their own phone whatsoever. The kind of software that we use goes deep into the phone. It can only be installed really at the root of the phone. You can't install it after the phone's already up and running. So it would just be really difficult for parents to figure that piece out. In addition, there's over 1,000 different Android flavors out there. So this is a particular Android product that sits on top of certain phone models that we've picked, and we've really tested the entire product all the way from bottom to top to make sure that it's safe and appropriate for your kids. So yeah, that's the way we've cut down on loopholes.
Okay, so what does it do then? What exactly does it do?
Yeah, so a few things. We have a curated set of apps, first of all. So as opposed to the entire universe of apps, it starts in sort of a walled garden state with first of all, nothing on the phone. So the defaults are really safe. You can hand it to any child and it's ready to go for a kid right away. And so anything that you add to it is by volition. So you can pick from those 1,500 apps that we've curated and written descriptions for parents about. So we can tell you how much, potential harm there is to your kid in any particular app, and give our recommendations on it. So that piece of the product is big. Of course, it has location tracking, geofencing. It has contact management. So you can set it in different levels depending on your kid's age as to what kind of contact for approval that you'd like. You have text message monitoring, so you can actually review and read the text that they're sending with their friends. You can then cut that back and turn that off as they get older. So the whole idea of graduation steps is really something we believe in in a large way at Pinwheel. And so it's really about helping them to get started on the right foot, but then helping to grow them towards responsible adults as they age. And so the feature sets really mirror that philosophy.
Is this just not parental controls on a phone? I think a lot of phones have that already.
Yeah, it's quite a bit different from parental controls. I would say an over-the-top app, one that you download from the App Store and gives you some parental controls, can be helpful. but it's just loophole ridden. It's really not tested with every flavor of operating system you have out there. So we see those products generally be 3-star products. They generally end up with kids working their way around them, finding workarounds, right? So that's a big problem. The other option is to use the operating system's parental controls, which are just lacking in features, right? You can't read the kids' text messages. You can't put their contacts into particular groups. You don't get easy access to geofencing and geolocation and notifications around that. You don't get our AI summaries, which, on those products. So in our product, you can actually give an AI summary of all of the text messages in a group, for example, and quickly get an answer of, everything that's been happening in that group without having to read the whole thing. So there's just a bunch of features that we've built that make your life much easier as a parent, and really only works when you sort of approach the problem the way we have, which is sort of control at the device layer as well.
And do parents need a phone to control this, or is everything on that phone and you have to go in, log in on that phone for your kids?
No, you do. That's a great question. You don't have to log in on the phone for your kids. You do everything remotely. So you have on your own iPhone or Android or the web access to a parental control suite of software. And that's one of the big advantages of Pinwheel, is being able to even install an app remotely, right?
And so you have to be proactive though as a parent. You can't just, can the kids do anything on it? Could they access anything on their own? Is there any possibility of that?
There's really not loopholes in the product. This is a big thing that we focus on. So we hear all the time on other products that my kid always finds a way around. We don't hear that on Pinwheel. We don't have an open web browser at all, which is a big source of loopholes. So there's no web browser. There's also no social media at all on the phone. So a lot of the harm that we see kids get into is in that vein. And so we just cut it out completely. Of course, if you install other apps that, we can't control everything in every app. So that's why we write the descriptions of the apps that you put on the phone, so that you as a parent can be well informed of every app that you put on the phone. And some of those apps can, I wouldn't call them loopholes, it's just how they're built. Might not be something you agree with as a parent, and that still is your responsibility to make sure the content and the apps that go on the phone match with your value set.
Now, how is AI changing this? I mean, could AI be used to hack through this? Are you incorporating AI?
We are big fans of AI. I think one of the core philosophies of the company is that we're raising kids for the future, for the world that they're going to inhabit in the future. So we have a product called Pinwheel GPT. It's a kid-specific AI chatbot. It will not impersonate people. It will not try to build relationships with your children. It will not give them answers that are beyond the scope of what you would want it to answer for. So anything that's controversial, it will simply opt out of. And anytime they try to build an emotional connection with the bot, it will actually opt out of that as well. So it gives short, appropriate answers for kids. It's been designed specifically for kids, but it gives them a way to open up their world of curiosity, right? To find out about their favorite animal or to learn how to build a business, right? So kids are using that day in and day out, and it's really integral to Pinwheel's product. So any kid that has a Pinwheel phone can use it. We do have a certain level of prompts they can get before they, I would say anybody who the parents have allowed, it's available on every phone, but you can still opt out of it if you don't want it at all as a parent.
Well, we have to,
so yeah.
Sorry, Dan, I apologize. We have to wrap it up there. Time constraints, but thank you very much for joining us.
Thanks for having me. Have a good one.
You too. Dane Whitbeck is CEO and founder of Pinwheel. Still ahead, we'll take one last look at the markets before we go. Know Your Options is back. Tune in today at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions at knowyouroptions@bnnbloomberg.ca. All right, and taking a look at the markets, they are going gangbusters today, having a good day. The TSX well into record territory right now. Intraday highs reached, and looks like it will close with a record high. We'll have to wait and see, of course. Still a couple hours to go, but it's up 0.7%. S&P 500 starting to edge up towards 7,000 again, up by 0.75 of a point. And take a look at the NASDAQ. It is also up by 1.2%. NVIDIA earnings coming down after the close today. We'll see how it goes. Let's take a look at some of the movers right now. And Thomson Reuters is up again, 10.3%, roughly 10.3%. Exchange Income Corp, also another mover at 8.26%. And Bitfarms up by 8.31%. Now down, Loblaw had their earnings reports and not as strong as people had hoped. It's off by 5.7%. Element Fleet Management up by 3.3%, and CCL Industries also down by about 3.4%. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thanks very much for joining us. Have yourself a great afternoon.